How to evaluate a real estate investment. I got this request on multiple videos actually, so I thought I would break down how to evaluate a rental property. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier, so let's dive right in. All right, I don't want to let uncertainty hold you back from investing in real estate because I have found real estate to be very successful for myself. I also invest in the stock market. But today I want to break down how to evaluate a real estate investment. The first thing that we want to do is to define our investment criteria. Right? So what is it that we want to be investing in? What type of property? For me personally, I like buying good properties in a good condition, in a good location. So that way there's not upfront work that has to be done before I can get the property rented. And by purchasing in a good location, then I'm able to easily rent out my properties. When I bought my very first rental property, it was just a 2-bedroom, 2-bath condo. But now I would much prefer to have a larger property, like a 4 or 5-bedroom property, so that I can make more money on one property rather than having 2 separate properties. And then also you want to know if you are looking for more of a fix and flip or if you want to do a buy and hold strategy. I clearly do the buy and hold strategy. So I'm just looking for a property that I can rent out for the long term and have it appreciate, go up in value over the years and create cash flow from that property. Once you've established your criteria for your real estate investment, then we can move to step number 2. And that is to conduct your market research, we'll call it. For me, I invest in the area where I live. I don't have any out-of-state properties because I know the market really well here. I know where would be a good location to have a rental property. So if you are investing out of state, you want to make sure that you are looking at the market conditions for the real estate market in that area. You can look at historical growth in that area and determine if it will continue to grow. You can look at the location. Is it near businesses? Is it near the mountains? Is it near the beach? Kind of figure out if it's going to be a good property for the longer term, if you're looking to invest in buy and hold real estate properties. And then once we've determined the area that we want to invest in, the third part is to do a financial analysis. And honestly, I keep this pretty simple since I am investing in properties for the long term. I'm not concerned about making a quick win. I'm not concerned about making cash very quickly. I'm just thinking, all right, I know it will appreciate over the longer term. I know rent prices will continue to increase over the longer term. So even if I break even on this property, it's still a good investment for me. And honestly, since I'm investing for the long term, this isn't such of a big deal, but it's called cash on cash return. And it's very simple. You're just going to take the amount of rental income you're receiving every single month and deduct out the expenses for that property. For example, you're going to want to take into consideration the mortgage for that property, and there are a lot of online mortgage calculators that you can use. You just enter in the price that you'll be paying for the property and the rate, the interest rate you're getting on your mortgage, and then how long you're going to have your mortgage for, and it will calculate a mortgage payment for you. So you want to know your mortgage payment, and then if there is an HOA associated with the property, a homeowners association. And a lot of people associate townhomes or condos with HOAs, which yes, they do have HOAs, but even some single family homes will have an HOA. For example, if it's in a gated community and there's a pool and they take care of the yard work, that's going to have an HOA. So just be sure you know whether or not there is an HOA. And then you'll also want to take into account any expenses that are going to come up. For example, maintenance, or if you need to replace a water heater or an air conditioner, things like that. And of course, you don't know when those expenses are going to happen exactly, but we can just give a good estimate. So depending on the condition of your property, it could be maybe 10% of the rent that you're receiving that you could set aside for those type of costs. Unless it's a really older home and you know you're going to have to repair a lot of things or replace a lot of things. And then you'll want to know what your insurance is going to be, your homeowner's insurance. And you can also find an estimate online for that, and then what your property taxes are going to be. And then you'll want to know the rent amount that you are going to receive every month. So you can do some research and just see what current properties are listed online for rent in that area and find ones that are similar to yours. And then you can get a good guess on what you could charge for rent. And with the mortgage payment, it includes your principal and your interest. And if you're paying PMI, private mortgage insurance, it will include that as well. So you want to total up all of those costs. Once you have that total, you'll take your monthly rental income and subtract out those monthly costs or expenses that you will have. And then you're going to multiply that number by 12. For example, if your rental income is $2,000 and your expenses are $1,500, then you would have $500 left over. And then you'll multiply 500 by 12. And that is going to give you your annual income, your annual cash flow. And then you're going to take that annual cash flow, so in our example, it would be $6,000, and you're going to divide it by the amount you paid for the property just up front. So what was the down payment and any closing costs that you paid? And let's just say it was $20,000. So you'll take that $6,000 divided by the $20,000, and then your cash on cash return would be 3%. And honestly, when I was first looking for properties, I had a really high cash on cash return that I was looking for. Since housing prices have gone up so much, I look for a lower cash on cash return. So it could be around 6%. And I want to share an exact example with you. So this was on the fourth property that I purchased. I had my down payment and my closing costs at $76,885. And then my annual expenses were $26,053. And my rental income was $30,894. If I subtract $26,053 from my $30,894, I will get $4,841. So that is the cash flow for the year. And then I would divide that by the $76,885, the down payment and the closing costs. So for this property, I was able to get a 6.3% cash on cash return. And if you want to go way back to my first rental property, I had a 48% cash on cash return for that one. So you can see there is a drastic difference there. So just depending on the market, your cash on cash return is really going to vary. Okay, let's move to the next step on evaluating a real estate investment. And number 4 is property inspection. We want to make sure that the property is in good condition. At least that's what I look for. And when you're actually purchasing the property, you will have an inspection done so that you can make sure that the property is in sound condition, that there's no major problems, that the foundation isn't sinking or something like that. But the inspection will show any red flags that the property may have, and then you can decide if you still want to move forward or not. And then step number 5 is to assess the risk and the return. You want to make sure that you're going to get the return on the investment that you want and that you are not taking on too much risk. Sometimes with real estate investors, if they invest in one property and then they want to do another and another and they're just building up very quickly, they over leverage themselves and they are at very high risk. And as we saw during 2020, a lot of real estate investors were not doing so well because they were over leveraged. So we just want to manage that risk appropriately. And we want to make sure that we are getting the return that we desire. Like I mentioned before, even if the property is breaking even, I still think it's a good investment. My properties, when I first purchased them, they were around $300 that I was making in cash flow every single month. So not super high, but still I thought that was a great return because I knew rent prices would increase over time, and also it's going to appreciate over time. And I can pay off the mortgage, which I have paid off 2 of my mortgages already. So now I have drastically increased cash flow on 2 of my properties. So just determine what type of return you want to be getting and make sure that the property you are choosing has that return. And then item number 6 is to consider that long-term potential. I had a lot of people telling me that I was crazy for buying in 2016 and even 2018, and the market was crazy then, but it continued to get crazier and crazier after that. And I didn't listen to them because I have that long-term perspective. Like I've been saying, I know that the property is going to appreciate over time and rental prices are going to go up over time. I'm not so worried about buying in a higher market because I've run my numbers, I know what I'm looking for, and I can move forward and feel comfortable with my investment even if the value of the property drops right after I purchase it. And that's part of the reason that I am buying good properties in good locations, because I know that they will continue to be able to be rented out. And then item number 7 on how to evaluate a real estate investment is to have a network. And it doesn't have to be a large network. I like using a real estate agent. I have my sister as my real estate agent, and I think she is amazing. So of course I'm going to use her. And then I also have a lender that I work with. So I have people in place that can help me purchase these properties, right? My sister can set up showings for me. She can set up the hot sheets, so I'm getting notifications on homes that are for sale. And then I have my lender that I work with that can give me a good rate. So it's nice if you just have people in place that you can work with to help make the real estate investing process easier. And then item number 8, and I feel like this one is really big, and some people actually ignore this one, but it is to trust your intuition. After doing all of these things, right, after selecting your location and finding a good property that's in a good condition and seeing how much you can rent it for and what the expenses would be, you've run your numbers, you feel good on your return that you are getting, and you feel like it's not too risky. In the end, you have to trust your intuition. Even though everything looks good on paper, if it doesn't feel like a good investment for you, then definitely don't invest in it. Honestly, every single property that I have bought, I have prayed about it. I've gotten that confirmation that, okay, this feels like a good investment and I can move forward. If I had the feeling that I should not do it, even though everything looked good on paper, then I would not do it. We never know what's going to happen, so we just have to trust our own intuition. And that being said, even if something may not look that great on paper, but we still feel good about the investment, then we can still move forward. Who knows what could happen later? For example, a lot of people were holding off on buying a home in 2018 and 2019 and so on because the market had gone up so much. But now a lot of people can't even get into the market because the housing prices have gone up drastically. So all of that being said, definitely listen to your own intuition after you have done your homework. And another thing, if after watching this video you're thinking, I don't want to do real estate, I just want to stick with the stock market, I can help you do that. I have a free masterclass where I go over exactly how I can help you invest in the stock market. I will leave a link below in the description. You can click on that and check out the free masterclass. And I want you to comment below and tell me, are you going to invest in real estate? And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more amazing content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.